Hi guys and welcome back. Good evening everyone. This is one of the last sessions, not the last sessions but the second last day. We have one more day and we get better and better at questions. Guys, if you understand tax, that's great, but understanding is one thing and applying it is another. So here we are applying all the concepts that we learned in these questions. We're looking at computation of income, but if you think computation of income is a different chapter, you're mistaken. Computation of income is not a different chapter. It's just an aggregation of everything that you know in tax. So it's like A, B, C, D till Z. We understand from A to Z, we learn, and then we make alphabets. That's what this is. This is making the alphabets. So we've done till question number 4. Now we're looking at question number 5 and beyond. There's nothing different here, but very important because exam questions are just like these. So this is the third question which we'd already done. Fourth and fifth, if you've not watched it, do watch it whenever you get time. But right now we're looking at the fifth question. Let's do this, and let's do this really well. Alright guys, this is a person called Mr. B. Always guys, the examiner can give you these complicated names. Don't fall for it. So Mr. B furnishes the following information for the year. Mr. B has income from business, from house property, from some casual income, some speculation business, some salary income, some long-term capital gain. You need to compute his total income, his tax liability and advanced tax obligations. Assume he does not opt for section 115 BAC. Classic question. Let's try and do this well. So I'm going to give you 2 minutes to first find out how to set off these losses, and then we will dive in. So over to you all. 2 minutes for you all to try. Find out his total income, if not the tax liability. Just try setting off everything and then we will try in just 2 minutes from now. Over to you guys. Alright, so let's do this guys. Set off is a very nice chapter whereby you take your incomes and you set off. But first I'll tell you the diagram which you have to draw. This has to go in rough work. So there is salary, house property, PGBP, capital gain and IFOS. Your income by way of salary, so just have to plug in the numbers. Textile business is a loss, so I'm writing normal business and I'm writing loss of 1,35,000. Income from house property is again a loss, so house property is also a loss of 15,000. Lottery winning, casual income, no one can touch this casual income, that is 5 lakh rupees. I'm already putting a box on it because no one can touch it and they want 30% on this casual income. Speculation business, guys, this is speculation business. Income is 1 lakh. If this was a loss, it was unique blood, but this is not loss. Income by way of salary is 60,000. They've written computed, otherwise you would have to compute it. And long-term capital gain of 70,000. This is capital gain 70,000. And because it's long term, I'm just writing 112 because you know it's flat 20%. Now guys, individually, let's say there is a blood requirement. In salary, there is never a blood requirement. House property, there is, but there is no blood within the family. Business, there is blood requirement and there is blood also. So you can take blood from here, 1 lakh. And here 35,000 will remain. So 35,000 will remain from normal business. Capital gain, there is no blood requirement. So is casual income. Now we go to outsiders. Can house property go to any head? Yes, except casual income go to any head. So I'm going here only, 15,000 I'm minusing here. So that gives you 45,000 of salaries. So salary becomes 45,000 because 15,000 is gone, and here this gets over. So house property is over. Now can normal business or can business go outside? Yes, but salary it cannot go to. Capital gain it can go to? Yes, it can go to capital gain. So I'm minusing 35,000 from here. So this is over and this becomes 35,000. No losses now. So salary income is be taxable. Capital gain is taxable, but this is under 112, and casual income is taxable. So 5,80,000 is your total income. Here we go, 5,80,000. It's almost like magic, guys. I'll tell you how to present this also. Now that you know this diagram, you have to present it in the same manner as you see this diagram. So you will have to have computation of total income and tax payable of Mr. B for the year blah blah blah. You'll do that amount and particulars. And whatever you see, when we did this diagram, we started off with losses. But when you actually do this, you will start off with income. So you will write salaries. You will put 60,000 in the inner column because I know I have to adjust something, and you will write less loss from house property under section 71, 15,000 you minus, and whatever you put in a box, that will go in the outer column. So 45,000 goes in the outer column. Next, house property we've already minus, so you don't have to show that. Business, same thing here also. For business also, you will write PGBP. You will first write speculative, always write the profits first. Speculative income, you will write 1 lakh less loss from non-speculative business 1 lakh. So you will put dash outside because PGBP has a dash. Capital gain is 70,000 next, so you will write capital gain. So what I'm trying to tell you is, when you present the exam question, you will always take the incomes and you will minus the expenses, minus the losses. Capital gain, long term capital gain under section 112, that is 70,000 less loss from non-speculative business under section 71, 35,000. So what you put in a box here will go in the outer column, that is 35,000 will go in the outer column. And last, IFOS casual income, that is 5 lakh rupees. So this is how you will present it in the exam, of course neater and with working notes. 5 lakh 80 is your total income. Now guys, the more interesting part, which is the tax payable. So you always know guys, now there are 3 incomes. One is normal income, one is at flat rates. So you will split this total income of 5 lakh 80. I'm doing the splitting up here of 5 lakh 80 into 3 parts. One is 45,000, which is normal rates. One is 35,000, that is at the rate of 20%, and one is 5 lakh rupees. And you have a basic exemption limit, if you know. So can I use the basic exemption limit? First I have to use against the normal income, so I'm using this here. Is my basic exemption limit over? No. 45,000 is over, 2 lakh 5 is left. Can I minus this also? Yes, I can minus. Is my basic exemption limit over? No. 1 lakh 70 is left. But can I use it against casual income? No, nothing can be minus from casual income. So this, your basic exemption limit cannot minus. Nothing can touch casual income, guys. So no income, no tax, but on lotteries, 30% plus, there's no surcharge plus cess, so 1 lakh 56. Now guys, when have you won this lottery? Whenever you won this lottery, on this you will have to pay advance tax, yes, in the quarter in which you won the lottery, because they've asked us for advance tax implications also. So you will write, the assessee need not pay advance tax since the total income is below the basic exemption limit. Further, also whatever you had to deduct, so basically you had to pay 1 lakh 56,000. As you can see, you had to pay 1 lakh 56. Out of that, 1 lakh 50 has been deducted under TDS. So your liability is only 6,000, and since it is not greater than 10,000, there is no advance tax. Remember, advance tax is only if your tax liability after TDS is more than 10,000. So in this case, there will be no TDS liability. That is the question, guys. Any question in your mind should be flagged off whenever you want. I could address any question that you have only if I know about it. Perfect. Guys, looking at the 6th question now, I would want you to first try reading this. Mr. Rajiv, he's a practicing chartered accountant. He's given you the receipts and the payments account. Basically, he's following the cash system of accounting. Looks like he's following cash. Yes. We need to compute the total. Mr. Rajiv follows the cash system of accounting, which is perfectly okay. In PGBP and IFOS, you can follow whichever method of accounting you want. Compute the total income of Mr. Rajiv for the year 22-23, assuming that he has not opted to pay under 115 BAC. So what I'm going to do, guys, I'm going to leave this question here on the screen for a minute for you all to read before we get into the details. Please read and see if the payments look okay, if the receipts look okay. Alright, let's do this, guys. First, staff salary, bonus and stipend to article clause. This looks perfectly okay. Other admin expenses till now looks okay. Office rent looks okay. Housing loan repaid to SBI including interest, guys, this has been minused. This has to be completely added and it has to be taken, the interest has to be taken under 24B and the principal has to be taken under 80C. Opening balance of 12,000, this is cash, this we don't need. Cash and hand and bank, fee from professional, this is perfect. Rent that you've received, we might have to remove it and put it under IFHP depending on what rent it is, but rent definitely for a CA is not PGBP. Motor car loan, this also we'll have to remove because loan is not an income, so we'll have to remove these items. Next, life insurance premium, 10% of sum insured. Guys, this we'll have to take it into 80C. Motor car acquired in Jan 22, this we will have to take depreciation on. Medical insurance for self and wife paid by account pay check, this you can take under 80D. Books brought on 1st July, this we'll have to take depreciation. Books, guys, at the rate of 40%, always don't forget that. Books they expire soon or they get outdated soon. Computer, again depreciation at the rate of 40%, but here it will be 20 because put to use for less than 180 days. Domestic drawings, this is nothing. PPF subscription, this is 80C. Motor car maintenance is perfectly allowed as a business deduction, and closing balance cash in hand. Perfect. Following further information is given to you. He occupies 50% of the building for own residence and let out the balance for residential use at a monthly rent of 5,000. So in this same house, there is SOP also and there is LOP also. SOP, as you know, everything is 000. Only thing is 24B. You can minus up to 2 lakh or 30,000. And LOP is a monthly rent of 5,000. So 5 into 12, that is 60,000 is the annual rent. But remember, guys, here the building was constructed in 1997-98 and the housing loan was taken then. So if you remember, for 2 lakh or 30,000, what is the 4 conditions? A certified 5 accounts for 99. This is not that. So the SOP limitation will be only 30,000. There is no capping on the LOP. We'll do the calculation, but I'm just telling you what we need to calculate. Motor car was used for both official and personal purposes. 1/5 was personal. So whatever is the expenses, a 4/5 will be allowed, 1/5 will not be allowed. The written down value as at the start of the year, furniture and fitting 10%, plant and machinery 15%, computers 40%. These are the rates, I'm just putting them across. That's it. Wow, perfect. Let's start, guys. Compute the total income. I'm going to start computing the total income very nicely. Let's do this. So wherever I have more space, yes, computation of total income of Mr. Rajiv for the year, etc., etc. This is amount and particulars. If you don't want to cramp up your table here, you know he does not have any salary, so don't write it. You know he has income from house property, so you can do that and you can write working note 1 and you can add the final amount here. You know he has PGBP, so you can write working note 2 and you can add that amount here. There is no capital gain and there is no IFOS. Till now I don't think there is IFOS, so that will give you your gross total income, and then you can have deductions under chapter 6A, and then you can have total income. So this is what the table should look like. Very neat, very clean, very less of calculations, and all the calculations should be in working note. So let's do the first working note, guys. Working note 1, I'm doing working note 1 here. You will write that the house is partly self-occupied, partly LOP. So the first you will do SOP calculation, where you will show GAV as nil. You will minus municipal taxes. I'm going to slide detail so that you know how to present it. And you will do NAV, that is nil, 24A, that is nil, and 24B. Now for 24B, first we'll have to see how much interest is he paying. If you see, housing loan repaid to SBI includes interest of 88. Now 88 half is 44. So but 44 you cannot take, you can only take 30,000. So you will minus 30 and that is your loss from house property, at least the SOP part. And you will write a note for this below this only, that since the house was constructed in 1997-98 and the loan was taken then, hence the limitation is only of 30,000. This is SOP. Now doing LOP. Guys, LOP, the monthly rent is 5,000. You have taken rent as 50,000, but guys, doesn't matter. In PGBP and IFOS you can choose the method of accounting, and IFHP you can't. So it is 60,000, that is LOP. I don't think they've given municipal taxes. Let's still check. I have not read any municipal taxes. Nope, there are no municipal taxes. So you will do LOP, that is the second. The GAV is 60,000. The absence of municipality figures the standard. We will take this as a GAV. Less any municipal taxes, there are none. So your NAV is 60,000. Your 24A is 30% of this ad hoc, that is 18,000, and 24B is half of the total, that is 44,000. No limitation, yes, no limitation. So 44, 54 and 62, actually there will be a loss of 2,000 here and a loss of 30,000 here. So there are 32,000 of loss. Let's check that. Here guys, magic, 32,000 loss from house property. So while they've done all the calculation here guys, for you in the exam I would not recommend it, because this looks very cramped. This is written on a computer. I wish our writing was like this. So in the exam, what you could do is try and take this into a working note and try and do it there. Now that you know this, let's go to PGBP. I'm just erasing all of this. Perfect. I'm just erasing all of this so we could write here. Okay. Now guys, doing PGBP or profits and gains from business and profession, he follows cash method of accounting, so we'll also follow that only. So you will take all the incomes. Fees from professional services 59,38,000. So you will take that 59,38,000. Next, motor car loan, you will not take that, but that is 9% per annum interest. We'll see what to do about it. So receipts are only one, that is 59,38. Now we'll see expenses. Staff salary bonus, type in 21,50,000. Can I minus that? Yes, 21,50,000 I can minus that. Guys, there is no profit to take this time, so I have to start from scratch and calculate. So this one is done, this one is done. Administrative expenses 11,48,000. I can add that, I can minus that, 11,48,000. Next, office rent 30,000. I can minus that also because that's an office expense. Golden rule, any expense related to business and profession I can minus. Housing loan I can't minus, but I know that 1 lakh I can take under 80C. So I'm just going to prepare myself here only for 80C. I'm just going to write 80C 1 lakh, just preparing myself for that. Okay. Life insurance premium 24,000, so I'm taking that also plus 24,000. But 80C has a limit guys, remember 1,50,000. Motor car acquired in Jan 2022 by account paid check. Guys, Jan 2022 means basically they've acquired it and for part of the year you've used it. So 4,25,000, I'm going to add 4,25,000 here. Motor car to plant and machinery 4,25,000, and this is for half the year. And in that also depreciation 1/5 will not be allowed because 1/5 the personal car is used for personal purposes. Next, medical insurance premium 18,000. Guys, I'm gonna write 18,000 here. 80D is 18,000. All this you can write directly in the table, no working notes required. Next, books bought for 20,000 on 1st of July. Books are not given here, so I'll make another column books and I'll put 20,000, for which I'll have to calculate depreciation. Computer acquired on 30,000 for computers, so I'm writing 30,000 more, and half the year I'm writing Domestic drawings to be ignored. Provident fund 20,000, so I'm putting 20,000 here more. Motor car maintenance 10,000. Can I minus that right away? Yes, but divide by 5. Only 8,000 I want to minus. And closing balance doesn't matter. He occupies 50% of the building. This is done. Motor car 1/5. This is done. Only thing is now depreciation. So guys, let's see depreciation. Depreciation on furniture will be 10%, that is 6,000, plus on plant and machinery on 80,000 it will be 15%, so it will be 12,000. On 4,25,000, I'm not doing the calculation, I'm just writing it. 4,25,000 into 15% divide by 2 into 4/5. Why? Because 1/5 will not be allowed. Computers, on 50,000 you will get entire 40%, and on 30,000 you will get only 25%, and books you will get 40%. This is how you will calculate depreciation. Just showing you all the calculations, guys. This is the income. Salary, admin expense, office rent 8,000, motor car maintenance. Next, motor car, see, this is exactly the calculation we've done. Books 40%, furniture 10%, plant and machinery, on some it's half and some is full. Computer new, it's half. This is how you get depreciation. Gross total income. Housing loan repayment, we had taken that. This also we had taken. This also we had taken. This is within 1,50,000, so that note you have to write, so hence it's allowed. This is insurance. This is exactly what we would also get as our total income. Good job. Perfect. If you're understanding this, you're getting better and better, guys. Super, super, super. Let's go to question number 7. Nice. Question number 7 is something that I will want you guys to read first. It's compute the total income and tax liability of Siddhant as per both the regular provisions and 115 BSc. Excellent question on 115 BSc. Guys, what do we need to do for regular? Nothing. Just calculate it normally. And for special provision, that is 115 BSc, remember guys, in the income calculation, nothing changes. Only deductions you'll have to remove. So we'll have to take the regular first and then do 115 BSc, removing all the deductions. And of course, tax calculation will be different. Let's do this. But first, I'm giving you 5 minutes to read this part and the next part. Just read it, no problem whether you're understanding or not. If you're understanding, great. If you're not, I'll help you, don't worry. But first, read this. Just don't get worried about that 115 BSc right now. All you got to do is just focus on the question. Take it one line at a time and you'll get it. So following are the details, compute the total income. So let's start computing. You will write like this: computation of total income of Mr. S for the year, etc., etc. And you will make 2 columns, amount, and particulars. Now, basically this is salary including dearness, etc. So if you want, you can write it here only, income from salaries. And you can start calculating. Any working notes we will write in the working notes. So first one is salary including dearness allowance, that is 3,35,000. So the first one is salary, and in the inner column, because we still have to do SAP minus SEP, so this is 3,35,000. Bonus is 11, so this is the next one. Bonus is 11,000. Next, salary of servant provided by the employer. Guys, any person or any benefit that you get personally which is paid by the employer is a perquisite. So you will add the perquisite under section 17, if you can write that, and then 12,000. And please keep tick marking whatever you do. This and 115 BSc, there will be no change, because incomes there are no change. Absolutely. Rent paid by Siddhant for his accommodation. Guys, when you pay rent, it is basically an expense, it is not an income. So right now I'm not doing anything, but if you get HRA, you can minus this, or you can minus it under 80GG. If you remember that hidden adjustment, 80GG, whereby Ghar, if you have taken a house on rent, then you can minus the amount of 5,000 per month, or rent paid minus 10% of ATI or 25% of ATI. You can do that, but we'll see how that works. Right now let's focus on this. So I'm keeping this pending, rent paid. Bills paid by the employer for gas, electricity and water provided free of cost at the above flat. So this is again a perquisite. So this is another perquisite, 11,000. Moving ahead. Siddhant purchased a flat in a cooperative society in Delhi. Guys, he has a house in Delhi, and where has he rented a house? In Delhi only. So he will not get 80 GG. Remember, 80 GG you will get only if you don't have a house in the same city. So 80 GG will not be there. So this one is out of the window. Alright, so you will write a working note why you did not take 80 GG is because you have rented a house and you have bought a house in the same city. Siddhant purchased a house in a cooperative housing society in Delhi. Guys, whenever you purchase a house, it will either be SOP or it will be LOP, one of them. So we'll have income from house property as well. If it's SOP, you'll have only 24B. I don't even know what he's done with this house, but I'm just assuming it can be only SOP or LOP or a mixture of both. So he purchased it for 4,75,000. I don't know how you can get a house in 4,75,000, but that's what they're saying, which was financed by a loan from Life Insurance Corporation of India for 1,60,000 at 15% interest. Guys, this is what will be in 24B wherever it is. His own saving of 65, which is perfectly okay, and a deposit from a nationalized bank to whom the flat was given on lease for 10 years. So definitely LOP, not SOP. The rent payable by the bank was 3,500 per month. So your GAV is 3,500 into 12. I'm not doing the calculation. Municipal taxes paid by Siddhant is 4,300. So I'm minusing municipal taxes 4,300. So what will you get is your NAV. From that you will minus 24A and you will minus 24B also. 1,60,000 into 15%. Whatever that interest is, 1,60,000 into 15%, and this is 30%. So this will give you your house property. And remember guys, there will be no change in 115 BSc because 115 BSc says house property is the same unless it's SOP interest. So don't worry, not everything changes in 115 BSc. Alright, so this done. House insurance you will not get because everything is covered in 24A. He earned 2,700 in share speculation business as a loss of speculation, which is unique loss, so it will be carried forward, and 4,200 in cotton speculation, again unique loss, which will be carried forward. So these will just be a working note because this carry forward. In the year 2016-17, that means a couple of years back, he had gifted 30,000 to his wife and 20,000 to his son, who was 11 years old then. So guys, gifting the money is not a problem. On that money, whatever you earn will be clubbed. The gifted amounts were advanced to Mr. Rajesh, who was paying interest at 19%. So some people think this is second level of income. No guys, this is not second level of income. The same amount has been given to Mr. Rajesh, who's giving you interest. So this 30 and this 20 is 50,000. On that, Mr. Rajesh is giving both of them interest. That will be clubbed in the hands. But remember, when you club the son's income, you can minus 1,500. Siddhant received a gift of 30,000 each for 4 friends. So there is IFOS also of 1,20,000. And there is ATC of 50,000. So let's finish this sum, guys. So just checking the answer here. Salary, bonus, salary of servant, these are perquisites, standard deduction. So this is your salary income, which we will also get the same income. Income from house property 42,000. This is the same calculation that we had tried to do. This is municipal taxes, this is 30%, and this is interest. So you will get, and both these will be carried forward. Loss. Okay, so one is a income, one is a loss. Sorry, my bad. One is a income, one is a loss. This is he earned, my bad. 2,700 he earned, but you can minus 4,200 from this, and the balance has to be carried forward. Balance of 1,500 can be carried forward. Speculation business. Income from other sources, interest, that 19%, but you can minus 1,500. And for the wife also, this will be clubbing, and IFOS gift. So this is his total income. And deduction under ATC, that is his total income. Guys, this one is under regular provision. Now let me tell you what changes in 115 BAC. Nothing, you have to keep the same table in mind. In 11YC you will not get 50,000, so everything remains the same, but your salary income will be 3,69,000. This is in 115 BAC, guys. Incomes nothing changes, only deduction change. Salary, this has been taken off. In IFHP nothing changes, so IFHP is still 2390 only. Next, speculation, nothing, you can set it off. Income nothing changes, so this is again 1,28,000 only. And 50,000 PPF deduction you will not get, so 1,28,000 plus 2390 plus 3,69,000, this will be under 11 BSc, 3,69,000, 2390 and 1,29,500. Yes, 1,500 that you minus for child, that also you will not get, so it will be entirely 3,800 and 5,700. You will not get ATC, so this is basically under a 115 BAC. Now, which is more beneficial, you'll have to see. In this case, your tax liability was nil. I'll just show you. In the earlier case, it was 3,99,390, and because in rebate you'll pay no tax. But in the new scheme where you don't get rebate, it is 5,08,90, and in that the tax liability is rounded off, and hence you will opt for the regular provision, because not always the new section or the new option is beneficial. Perfect. Guys, they would have written a note on 80GG definitely. Since Siddhant's owned flat in a cooperative housing society which he has rented out to a nationalized bank, he is not eligible for deduction under 80GG. But otherwise, guys, remember, whenever you're paying rent, you will either get an HRA exemption or you will get 80GG. Perfect. Guys, 8th, 9th, 10th and 11th, 4 more questions. These questions are demanding and hence you got to do it well. This question can never be asked in the exam because it's too big even for 14 marks, but the concepts are important. Guys, going to the 8th question, keeping it on the screen for you all to read before we start doing this. This is salaries. I don't want to get into too many details, but still we will do it. Over to you all. First read and before we discuss. Alright, so not going to the details of this question again because salaries we've anyways done a lot, but anyways, Ramdeen, who's 33 years working as a manager sales with Frozen Foods Limited, provides the following information. What they want us to calculate is compute the total income and tax payable. So first, this is basic salary 15,000 into 12, assuming he has worked for the entire year, and that is B. DA 50% is the entire thing is taxable, and 50% of that will be D. Commission as a percentage of turnover will be C. Bonus will be taxable, so I'm just putting a tick on amounts which will be taxed. Gratuity received during employment is always fully taxed. Own contribution to RPF, this we will get 80C deduction, I'm putting in a box bracket. Employer's contribution to 20% of basic, so you will first add this and you will minus 12% of BDC. Interest credited, you will add this and you will minus 9,500 because up to 9,500 is exempt. Gold ring worth 10,000 was given by employer, so you have two options, either add the entire thing as a perquisite or add 5,000. I'll take 5,000. And remember, do not forget to minus SEP. This is all SAP. Music system purchased by the company and was given to him for personal use, so into 10%, which is the perquisite value. 2 old light goods vehicles owned by him were leased to a transport company against a fixed charge of 6,500. Books of accounts are not maintained. If you don't maintain, then you'll have to take 7,500 per month and you cannot go with 6,500, but this is PGBP. 44AE. It received interest of 5,860 on bank FDs on 24th April and interest of 7,8 from the debentures of Indian companies. So first up, this is net. Net does not allow, so 6,786 divided by 90 into 100, that will go in IFOS, and 5,860 will also go in IFOS. And assuming, guys, he is 33 years old, he will get a deduction. He may get a deduction under 80 TTA if he has any saving account interest, not an FDs. He made payment by check of 15,370 towards premium of life insurance for self and spouse. So both, this will 80C and this is 80D. invested in NSE ATD, FDR ATC, donation to an institution approved under ATG. Guys, institution approved under ATG means this is the fourth category, so we'll have to solve everything and then you have to solve ATG. And Prime Minister's National Relief Fund is the first category, so but because we have fourth category, we'll have to solve everything to find out ATI. Basic salary, dearness, commission, bonus, gratuity. Guys, gratuity received during employment is taxable for everyone. Employer's contribution less 12%, so this one will be taxable. Interest less 9,500, so this will be taxable. Gift of gold, they've taken 10,000, but you can also take 5,000, is perfectly okay. Perquisite 8,500 and less standard deduction, so this is income from salaries. So we cannot take 6,500, we'll have to take 7,500 into 2 into 12, that is 1,80,000. Interest and 6786 divided by 90 into 100, this is the gross amount. But remember, TDS you can always take in here, you can always take credit of TCS or take a refund. Less deductions, ATC, premium, investment, FDI, employees contribution, all this, ATD and ATG. But for ATG you will have to stop here and you will have to calculate your adjusted total income. What is adjusted total income? Everything except this. So you will take 5,99,160 and you will minus 1,25,370 and you will minus 22,500 and that will give you a ATI and 10% of your ATI. So let's see that calculation, guys. Yes, 45,129 is 10% of ATI, or the amount contributed 11,000, whichever is less, 11 is less, and then 50% of that. Always remember, compare first and then do percentage. I hope you've not forgotten that. So you have to compare 11 or 45,129 and half of that this and full of this 10,600. Very good question, but very long, guys. Even for 14 marks this is very long, so don't worry, but conceptually you have to understand. Don't worry about how I will finish. You will finish as long as your concepts are strong. This is total income, guys. Because your total income is up to 5 lakh rupees, you will first calculate the income tax and then give a rebate, and whatever TDS has been deducted you will take a refund. Guys, that is the 8th question. Looking at the 9th one now. Again, guys, this is salary. I'm not going to do this because it's all about retirement, tenure, service, etc. Not important. I have not seen an examination question around this. We've done a lot in salaries anyway. Gratuity, leave, PPF is ATC. So all this kind of total income. You can do this 9th one on your own. If you have any doubts, you can always reach out to me, but examination stays away from salaries, just gentle reminder. 10th question. What we need to do in these two cases, guys, I'll just read out what we need to do. Compute the taxable income and tax liability of Rosie and Mary. So first only the income, Rosie and Mary. Here we go. Rosie and Mary are sisters. Rosie got married in 82 and settled in Canada, so Rosie is a non-resident, and Mary is in India only, so this is a resident. First try, ignore the one on the next page, first try this and then we will discuss. I'll give you about 3 minutes to do this before we start discussing. Alright, let's do this. Rosie and Mary, guys, this is a non-resident, this is a resident. First let's do it for the non-resident. Pension received from state government, nothing. Pension received from Canadian government, is it dear income? No, so hence not taxable. Long term capital gain on sale of land at Mumbai, is it dear income? Yes, and guys, it will be taxable at the rate of 20%, but remember, non-residents can't make use of basic exemption limit against this. Short term capital gain on sale of listed shares, so this one is 111A and this will be taxable at the rate of 15%. LIC premium paid, Premium paid to Canadian life insurance, guys, life is important wherever it is. So even this will get a deduction under 80C. Medical policy, check, deposit, all this is not there. Last is rent received in respect to house property in Mumbai. Will this be taxable? Yes, but only 70% of this, that is 42,000. So let's see. Rosie, there is no salary. Income from house property 42,000. Capital gain, long term and short term 1,20,000. So totally is 1,62,000. Now deduction is LIC premium, so 40,000 you minus there, so 1,22,000. But guys, most people will get this wrong because they'll think, oh, this is below the basic exemption limit. But remember, for Rosie, the basic exemption limit cannot be adjusted against long term capital gain and short term capital gain. So on that 20 and 15% she will have to pay, and hence 23,000 she will have to pay, plus cess of course. Very good, very subtle question, guys. Remember, just reminding you, we are already discussed this. For a non-resident, these two capital gains, she cannot adjust the basic exemption limit. Now let's do it for a resident. Pension received from state government is 60,000. Pension, so this will be taxed, but of course you will get minus 50,000 also. So I'm just writing minus 50. Long term capital gain, this will be at under 112. Short term 111A at the rate of 15%. This will be at the rate of 20%. LIC premium, this is 80C. Mediclaim 80D. Deposit and PPF 80C. So lots of deductions. And 30,000 into 70, that is 21,000 house property. First salary only 10,000. Why? Because 60 minus standard deduction, so 10,000 we also got it. 21,000 also something that we got. Long term, short term 3,50,000. So 3,50,000, 21 and 10. Guys, you might get a rebate here, but we will see how that goes ahead. 3,81,000 minus 10 minus 20 minus 25. So that is 55. Total deduction is restricted to income. Yes, very interesting, guys. Your deductions are 55, but your deductions you cannot minus from these incomes. 3,50,000 you cannot minus the deductions. Remember, guys, available and non-available. So you can only minus against 21 plus 10 is 31. So you will restrict it to 31. So your total income is 3,50,000. On that 3,50,000, 15,000 is your tax, but rebate is maximum 12,500, so 2,500. Remember, rebate cannot be used against 112A, but on 111A it can be used. So this is your answer. Slightly complicated because of two things. One, I'll tell you what. One is for the non-resident, they cannot use the basic exemption limit, and second is this 55,000. A lot of people would forget that your exemption, your deduction under chapter 6A cannot be more than your available GTI. Perfect, guys, we are just left with one question, but I am a little tired now. So what we'll do is we will take a 10-minute break here. We'll come back and we'll continue and we'll look at question number 11 and we'll see the strategy ahead. Perfect. Mr. X, an individual, set up a unit in a SEZ in the financial year 17-18 for production of washing machines. So basically the moment SEZ comes, guys, in your paper, remember there is a 10AA deduction, and now, guys, you also remember if there is a 10AA deduction, there is also alternate minimum tax to be computed. The unit fulfills all the conditions of 10AA of the Income Tax Act during the financial year 2021. It has also set up a warehousing facility in the district of Tamil Nadu. So not just 10AA, they also have 35AD, because storage of agricultural produce warehouse gets 35AD deduction. So AMT is definitely going to be calculated. It fulfills all the conditions of 35AD. Capital expenditure in respect of warehouse amounted to 75 lakhs, including cost of land. Cost of land you don't get deduction, but otherwise you'll get a deduction for 65 lakhs. The warehouse became operational with effect from 1st April 2021, and the expenditure of 75 lakhs was capitalized in the books on that date. So guys, we have two calculations. One is the SEZ unit. deduction and one is 35 AD deduction. Remember, SEZ unit deduction comes in the end from gross total income. So profit of unit located in SEZ, that is PGBP, will be 40 lakhs. So you will take PGBP, that is 40 lakhs. Next, export sales of above unit is 80 lakhs, domestic sales is 20. So basically your export sales is 80%. So 80%, and we're in the first 5 years. So 80% of 40 lakhs is 30 lakhs. That is a deduction under 10AA. So 10AA deduction is 32 lakhs. I'll tell you how I got it. It's basically export profit. You need to find out what is the export percentage into the profit. Your export was 80 divided by total 100 sales. So that is 80% into profit of 40. So that is 32 lakhs. So that you can minus. So 8 lakhs is your income from this business SEZ. Here we go. Same thing for warehousing also. Profit from warehousing is 1 lakh 5. Out of that, 65 lakhs is basically the deduction, 100% deduction. So you get 40 lakhs here. So totally 48 lakhs on which you will calculate tax. It is a person, Mr. X. So, and it is, there will be some tax and there will be no surcharge because not more than 50 lakhs, but there will be cess. So 13 lakh to 600 is what is normal. But guys, now you want to find out AMT. AMT is basically total income, that is 48 lakhs plus 65 lakhs plus 32 lakhs, and that will be your adjusted total income. If that is more than 20 lakhs, you have to multiply that with 18.5%, add surcharge and cess. Here we go. AMT calculation. You'll take 48 plus 32 plus 65. But when you take 65, you will get normal depreciation always, because obviously they are adding 100%, but they will give you normal depreciation. This is something I forgot to mention, but I'll just repeat it. You will add your SAD deductions, SAD. If you have not watched today's videos, the SAD deduction was explained there in AMT. If you have 35 AD specified business deduction or 10 AA deduction or income linked deduction like 80 JJ, AA, QQB and RRB, then don't worry, you can add those. But if you add 100%, you'll get depreciation at least. So this is what you will be called adjusted total income on that 18.5%. And because this is more than 1 crore, 15% surcharge and cess, and this is your total tax liability as per alternate minimum tax. You have to pay this and take the credit for the difference. So this is the credit for the difference. You'll have to pay under 115 JC 30 lakh 64 450. All right. Let's see what they've done ahead. They've taken 115 BAC also. They've also done 115 BAC. In 115 BAC, you don't get any of these deductions. So the total income will be 48 lakhs. 10 AA also you don't get, so they've added that also. And 60, this also they've added. So this is 115 BAC. Nothing different, guys. Only deductions you cannot take. And the extra tax that you pay will be allowed as a credit under 115 JEE. If you remember the section, otherwise 115 JC works for alternate minimum tax. Perfect. Guys, we've completed all the 11 sums of computation of income, which is a Herculean or a big task because these are all big unique questions. And now we are left with the paper questions and with the RTP. So we can do whatever we want. I basically want to cover the following things. So I want to cover the RTP. I want to cover the examination questions. That I want to cover. Just one second.